This is Barry Zalma speaking for Claim School Incorporated's blog, Zalma on Insurance, as we start the new year 2024. Today we're going to speak about why a failure to reside at your dwelling eliminates coverage, and that for coverage to exist on a homeowner's policy, the insured must reside at the residence. It is wonderful to be able to retire and move into a retirement home, but if you still own your residence, it is a requirement that you advise your insurance company and move to a non-occupied type policy, such as a policy covering rental properties. Unfortunately, most people do not read their insurance policy, and most people don't understand their insurance policies, and it is the obligation of those insurance agents and brokers who learn of a move made by a retiring insured to advise them. But if they're not asked or not told, the obligation falls on the retiree. The United States District Court was asked to grant dueling motions for summary judgment. One, a motion for summary judgment filed by Defendant Nationwide Mutual Fire Insurance Company, and two, a motion for partial summary judgment filed by Plaintiff Maurice Heh, substituted by Perry, Rutter, and Mary Jane Urbanec, Executor and Executrix of Heh's estate, hereinafter collectively referred to as Heh. In Perry Rutter versus Nationwide, the United States District Court for the Western District of Pennsylvania on December 22, 2023, resolved the dueling motions. Heh had owned a home in Braddock, Pennsylvania, at all times relevant. Nationwide insured the risks of loss to the structure and contents of the home in Braddock. Heh's Nationwide homeowners policy names Heh as the named insured and lists the property on its declarations under residence premises information. At page A1 of the policy under insuring agreement, Nationwide avers that coverage is contingent on compliance with all the policy conditions, and coverage A dwelling is described as coverage of the dwelling on the residence premises used mainly as your private residence, including attached structures and attached wall-to-wall carpeting. Coverage C, personal property, is described as the coverage of personal property owned or used by an insured at the residence premises. And the residence premises is defined in clear and unambiguous language as the 1, 2, 3, or 4 family dwelling, other structures and grounds located at the mailing address shown on the declarations, unless otherwise indicated. Now, Heh purchased the property in 1990 and resided there with his wife until her passing. On January 1 of 2019, Heh agreed to rent the property, and he and tenants entered a leasing agreement. There were indicia in the record that the agreement between Heh and his tenants provided for the possibility that the tenants would rent to own. There were also indicia in the record that Heh included his furniture either for the tenants' use during their occupancy or for the tenants to own in the rent-to-own agreement. After Heh leased the property, he moved to Point Pleasant Retirement Community. Once he moved into Point Pleasant, it was undisputed that Heh did not at any point move back to the property. On February 3 of 2020, before the tenants had fully moved out of the property, there was a fire that resulted in significant physical damage to Heh's home and the personal property inside of it. After the fire, Nationwide investigated the cause of the loss and denied coverage based upon the policy provision related to the occupancy of the dwelling. In its investigation, Nationwide determined that Heh had not resided in the resident premises for an extended period of time and had not notified that the property was rented to tenants. Heh, unhappy, sued Nationwide and alleged that an adjuster had determined the loss caused by the fire resulted in damage over the policy limit of $172,400. Nationwide, in its summary judgment motion, argued that the policy predicates coverage under both coverage provisions on the insured residing at the property. Nationwide established that there was no factual dispute or debate about whether Heh was living at the property. He was living at the retirement home. Reviewing coverage A, the court noted that Nationwide's argument that Heh's failure to reside at the property was an appropriate basis for denial of coverage A because there was no dispute. Heh did not reside at the property at the time of the fire or for many years before. Coverage A dwelling was unambiguously unavailable to him. Such coverage was only available for the dwelling on the resident's premises that is used, quote, mainly, close quote, as the named insured's private residence. Since the terms of coverage A are not reasonably susceptible to interpretation that it would entitle Heh to coverage, where the property was not being used in the principal respect or more than anything else as his private residence. It wasn't being used as his private residence at all and hadn't been so used since 2019. Therefore, the United States District Court granted Nationwide's motion with respect to Heh's allegations for failure to provide coverage under coverage A. Discussing coverage C, the court again noted that when the policy is read as a whole and its meaning construed according to its plain language, coverage C for personal property is conditioned upon the named insured's residence at the resident's premises. While the court was not unsympathetic to Heh's protestations that he should benefit from coverage when he lived at the property and paid insurance premium for decades before the 2020 fire, the court concluded that it was required to give effect to unambiguous language in the policy. Nationwide's motion for summary judgment was therefore granted, and Heh's motion for partial summary judgment was denied. In my opinion, anyone who reads a homeowner's policy, as did the United States District Court, will see that it only provides coverage if the insured actually lives at the property. That is the subject of the insurance. Heh left the resident and moved into a retirement facility. He did not tell his insurer of his move, nor did he attempt to obtain coverage for the property as a rental property that is easily and commonly available. As a result of his decision to move, Mr. Heh paid for insurance that provided no coverage for the loss to the property, although it did still provide liability coverage. I, as was the court, am not unsympathetic to the loss incurred by Mr. Heh. He has, however, no one to blame but himself. This video was adapted from my blog, Zalma on Insurance, which is available free to anyone who clicks on the URL zalma.com/blog. You can subscribe to the blog postings and to the blog at that site, and you will receive notice of every blog posting, usually 5, sometimes 6 a week. and you will also receive access to the more than 4,700 blog postings. You can also subscribe for free to the videos on YouTube and on rumble.com, and if you do, I'd appreciate it if you click on the like button on YouTube or the thumbs up button on rumble.com. Please tell your friends and colleagues about this blog and the videos so that they too can subscribe. And please, if you're interested in further detail concerning insurance, insurance claims, insurance fraud, and insurance law, consider for a very small fee subscribing to my Substack publication. Thank you for your attention, and a Happy New Year.